Welcome to Talk Tickers. We're your connection for breaking down the latest earnings calls, really getting under the hood of companies shaping the markets.
And today we're diving into a name that's generated a lot of interest. United States Antimony Corporation, ticker UAMY.
That's right. We're looking at their Q2 2025 financial and operating results. This is, well, it's a really fascinating company in that critical mineral space.
Absolutely. They're navigating some complex supply chain issues, making some big strategic moves, and the market certainly took notice after this call.
Yeah, definitely a positive reaction. So let's get straight to the numbers for UAMY's second quarter.
Okay, so the GAAP EPS was reported as $0, nil, basically.
Right, nil. But, don't let that specific number tell the whole story because the revenue growth was, frankly, remarkable.
It really was. $10.53 million in Q2. That's up 187% compared to last year. Huge jump.
And that builds on Q1, right? So for the first half of 2025, total revenue hit $17.53 million.
Up 160% year over year for the half. And get this, that first half revenue figure, it's almost $3 million more than their entire revenue for all of fiscal 2024.
Wow. Okay, that puts it in perspective. That kind of top-line growth, it obviously impacts the bottom line too.
Exactly. It translated into a pretty significant turnaround. UAMY posted actual net income of $0.18 million in Q2.
Then for the first half?
$1.73 million in net income for the first half. Compare that to a loss of $0.12 million in the first half of last year. So quite the swing.
That is a substantial improvement. What about gross profit?
Gross profit for the first half came in at $5.21 million. That works out to roughly a 30% gross margin.
Pretty healthy. And that's mostly driven by the antimony business.
Yeah, largely driven by antimony. And a big factor there was the selling price.
Right. Prices have been strong.
Very strong. The average selling price for their antimony in the first half was $22.14 per pound.
$22.14 compared to what, last year?
Compared to around $6 per pound in the first half of 2024. So a massive increase.
Okay. Now, there were some other figures, like cash flow and CapEx, that maybe looked less positive at first glance.
Right. They did report negative cash flow from operations, minus $2.36 million for the first half, and significant capital expenditures, $7.39 million.
So burning cash.
Well, yes, but it seems very much part of a deliberate strategy. You have to connect that to the inventory build.
Okay, explain that.
Their inventory ballooned to $6.81 million. At the end of 2024, it was only $1.25 million.
So they're spending cash, investing heavily in CapEx, and building up a lot of inventory.
Exactly. It looks like proactive investment, securing supply, expanding capacity to meet that demand, fueled by those higher prices.
Makes sense. So the numbers paint a picture of rapid growth and heavy investment. What's the underlying strategy here? Where are they trying to go?
Management was pretty clear. They reiterated their full year 2025 revenue guidance, $40 to $50 million. So they believe they're on track.
And the core strategy driving that?
It's all about building a reliable, domestic and nearshore antimony supply chain, expanding their processing capacity significantly.
The ultimate goal being?
To become a fully integrated Western antimony player. It's a big vision, not just about one quarter.
Okay, so how are they actually doing that? What are the operational moves?
Well, a key piece is the Thompson Falls facility expansion. That seems to be on schedule for completion by year end.
And that's a big deal because
it's projected to give them a six-fold increase in throughput capacity, which, as you said earlier, is critical for handling the increased supply they're sourcing.
But it's not all smooth sailing, is it? I thought there were some issues mentioned maybe in Alaska.
That's right. Up in Alaska, they're hitting some permitting delays from the Department of Natural Resources.
Why the delay?
Seems to be driven by concerns raised by environmental groups, specifically one called Save Our Domes.
Okay. And the impact?
It's pushed back their anticipated ore shipments from Alaska to Montana by about a month, which, isn't ideal when you're trying to ramp up.
So how are they managing that? Just waiting?
No, they seem pretty proactive.
Yeah.
To counteract it, they actually acquired a prospective private land block nearby.
Private land, meaning fewer permit hurdles.
Exactly. Doesn't need state or federal permits for the exploration work they want to do there. And they're also doing things like cleaning up old mining sites nearby.
Trying to show good stewardship, maybe build some goodwill.
Looks like it. Plus, they've contracted a gravity survey for that new block and have a letter of intent for a new packaging facility in Alaska. So they're pushing forward.
What about Montana? Any progress there?
Yeah, down in Montana, they're preparing an application to mine their ELISA claim more extensively without that previous 5-acre disturbance limit.
aiming to get ore moving from there soon.
They hope to be shipping ore from Eliza to the mill by mid-September. So things are moving on multiple fronts despite the Alaska delay.
And this ties into their diversified procurement strategy you mentioned.
Absolutely. They're not relying on just one or two sources. They're getting antimony material from 7 different locations currently.
Mostly foreign.
5 of the 7 are foreign. They mentioned shipments from Bolivia, Chad, Mexico, Peru, quite spread out.
But wasn't there an issue with one source, Australia?
Yes, good catch. Material they sourced from Mandalay in Australia turned out to be out of spec.
Meaning?
Too high in arsenic levels. Didn't meet their quality requirements.
So what happens with that supplier?
UAMY basically said they're not counting on future supply from Mandalay unless the contracts can be renegotiated. Shows they're willing to be selective about quality.
Okay. And any positive news on the supplier front?
Yeah, they also renegotiated their contract with a key North American feedstock supplier back in February. That's led to increased shipments, contributing to that inventory build we talked about.
Right, so they're actively managing the supply side. Now, there was something else significant, a diversification move.
Ah, yes. This is where it gets really interesting, I think. They acquired the Fostung Tungsten property.
Tungsten, where's that located?
Ontario, Canada. They paid $5 million for it.
Why is tungsten significant for UAMY?
Well, as management really hammered home, there are no active tungsten mines currently operating in the United States or Canada. 0.
Wow. And tungsten is important because
It's a critical mineral, especially for military applications. Think armor-piercing rounds, high-temperature alloys. Historically, a lot of it came from China.
So this could be a major strategic play for North American supply. Management sounded optimistic.
Very optimistic. They use the phrase very bullish.
But isn't tungsten notoriously difficult to mine and process? Low grades, hard rock.
It can be, absolutely. But they seem to have a plan. They're evaluating doing gravity separation studies right there on site.
To pre-concentrate the ore.
Exactly. Upgrade the low-grade stuff before shipping, which makes sense for open-pittable ore. And they're also looking at using existing mills nearby for processing, like the Strathcona mill.
Contract milling could save a lot on capital costs up front.
Potentially, yes.
Okay.
The course permitting is key. They need a 4-season environmental survey, which starts this September.
And engagement with local communities, First Nations.
Crucial. They highlighted ongoing discussions with First Nations entities, focusing on environmental protection and remediation right from the start. Seems like a responsible approach.
Okay, so ambitious operational plans. What about the government and investor angles? Any movement there?
Definitely. Their SVP of Corporate Development, Melissa Picon, talked about ongoing discussions with the Department of Defense.
DoD. About what specifically?
Focus on the Defense Logistics Agency, the DLA, and also DIAC, the Defense Industrial Base Consortium, discussing UAMY's capabilities in antimony, tungsten, and even cobalt.
Interesting. Now, I saw some chatter online about a huge potential DLA contract, $240 million.
Yeah, there's been social media buzz about that figure for antimony, but management was careful to state no official award has been made yet.
Okay, important clarification. But the discussions themselves are significant.
Hugely significant. It highlights the government's interest, and UAMY is leveraging its position as really the only domestic antimony processor with that long history over 55 years.
Their point being that kind of expertise can't be built overnight.
Precisely. Can't be reverse engineered overnight, as they put it. It's a key strategic advantage.
And on the investor relations side, are they getting this story out?
Very actively. They've really ramped up their Wall Street outreach, connected with over 120 institutional funds.
Has that translated into actual institutional ownership?
Massively. Institutional ownership is now up to 24% of the public float, held by, I think, 121 different accounts. That's up from virtually 0 not long ago.
24%. That's substantial buy-in from bigger players. What about visibility?
Trading volume is way up. Average daily volume now 4.8 million shares. The CEO's been on Fox Business, features in the Wall Street Journal, Reuters.
You're also dual listed, right?
Yeah, on the NYSE Texas Stock Exchange. Plus, attending lots of industry conferences, new marketing push, even a PR firm up in Alaska. They're working hard to get the message out.
Okay, so putting it all together, strong results, ambitious expansion, critical mineral focus, government interest, growing investor support. What does this mean for you, the listener, looking at UAMY?
Well, the market's immediate reaction, as we said, was positive. The stock jumped nearly 5% the day after the call on heavy volume.
So the market seems to believe the growth story. despite the cash burn from investments.
It seems so. That constructive sentiment suggests investors see the negative operating cash flow and high capex as necessary evils, investments needed to scale up and capture this opportunity, not necessarily a sign of weakness.
And compared to the broader sector,
UAMY has been a massive outperformer, trailing 1-year total return over 540%.
540% compared to what for, say, a general metals ETF like XME?
XME was up about 38% over the same period. So UAMY is really in a different league performance-wise lately.
Underscores that intense interest in their specific niche, doesn't it?
Absolutely. You've got antimony as a critical mineral, a global shortage pushing prices way up, and UAMY positioned as the key domestic processor. It's a potent combination.
Positioning themselves to strengthen that whole critical mineral supply chain for the U.S.
Right. For national security, for industrial needs, it's a compelling narrative.
Okay. Let's transition now. Time for our This Is Not Financial Advice segment. This is where we kick around some, let's call them outrageous but plausible trade ideas. Purely hypothetical brainstorming.
All right. Given everything we've discussed, the huge outperformance, the ambitious guidance, those DoD contract hints, there's definitely potential for big catalysts.
But also risks, right? The Alaska permitting, the Mandalay supplier issue introduces that sort of binary outcome potential.
Yes, things could go spectacularly right or hit a major roadblock. Which leads to our first idea. Let's call it the critical minerals war chest. Long strangle on UAMY.
A long strangle. Explain that. Betting on volatility.
Precisely. You're betting on a big move, but you don't necessarily care which direction. You buy both an out-of-the-money call option and an out-of-the-money put option. Same expiration date.
So you profit if the stock rockets up, OR if it tanks.
That's the idea. Maybe use 6-month options to capture potential news flow over the next couple of quarters.
What's the rationale? What triggers the big move?
Well, if that DoD contract actually lands, or Alaska gets fully permitted, or Thompson Falls really boosts Q3, Q4 revenue, boom, potential explosive upside. The calls pay off.
And the downside scenario?
If permitting totally stalls in Alaska, or other suppliers have issues like Mandalay did, or they struggle to convert that inventory efficiently, the stock could drop sharply. The puts pay off.
So you're covered either way as long as it moves significantly.
Right. Your maximum loss is the premium you paid for both options. But the upside is theoretically unlimited if it really takes off, or substantial if it falls hard. It's a pure volatility play on these high-stakes developments.
Okay, interesting. High risk, potential high reward if there's a major event. What's the catch?
Time decay, mainly. If the stock just drifts sideways, both options lose value over time. You need that catalyst, that big move to make it work. And implied volatility can make the options expensive to buy.
Got it. Okay, trade idea number 2.
Let's call this one the tungsten tailwind pairs trade. This involves going long UAMY, but shorting a tungsten ETF or some kind of proxy.
A pairs trade. Betting on UAMY outperforming something else.
Specifically, betting on its unique tungsten potential. Remember, management stressed. No active tungsten mines in the US or Canada right now. They're bullish. If Fostung comes online, UAMY could be the only game in town, essentially.
So you think UAMY stock could decouple from the broader metals market if their tungsten play works out?
Potentially, yes. If tungsten prices rise due to shortages, and UAMY is seen as the sole emerging North American supplier, its stock might surge even if the general metals sector is flat or down.
And shorting an ETF hedges against
a general market downturn or weakness in industrial metals overall. It helps isolate the bet specifically on UAMY's tungsten narrative succeeding.
even though tungsten mining is difficult.
Right. They acknowledge the challenge is low concentrations, hard ore, but they also mention potential solutions like gravity separation on-site and using existing local refining capacity.
So it's complex, but maybe high margin if they pull it off.
That's the bet. This trade tries to capture that specific niche advantage UAMY might carve out in tungsten, separate from just riding a general wave in metals.
Okay, 2 pretty bold ideas there. Definitely food for thought.
Purely hypothetical, of course.
Absolutely. So wrapping up on United States Antimony Corporation, Q2 showed really impressive revenue growth, a return to profitability, driven mainly by that core antimony business and strong pricing.
And they're clearly executing a very ambitious strategy, scaling up processing, diversifying where they get their ore, and positioning themselves in antimony and now potentially tungsten.
The heavy spending and negative cash flow show they're deep in an investment phase, no doubt. But those DoD talks and the strong guidance suggest management is confident. It points towards, well, an exciting 2026 and beyond.
You know, it really highlights something interesting. In this era of constant disruption, sometimes it's the established players, the old guard with deep specialized experience.
Like UAMY's 55 plus years in antimony.
Exactly. Sometimes they are uniquely positioned to meet these critical modern strategic needs. That kind of specific long-term operational knowledge is incredibly hard to replicate quickly.
A powerful advantage when dealing with critical supply chains. Definitely something to consider.
For sure.
Okay, a reminder to everyone listening, the discussion today on Talk Tickers is for informational and entertainment purposes only. It is absolutely not financial advice.
Investing involves risk. Always do your own thorough research and consult with a qualified financial advisor before making any investment decisions.
Thank you for tuning in to Talk Tickers. We appreciate you joining our deep dive and look forward to your feedback on this really quite fascinating company story.